And we are live. This is Travis from Carter Capital, Expert Advisor Reviews and Trade with Travis. Hopefully, everybody's doing very well on this Monday evening. This is another episode 312 of Trade with Travis. Hopefully, hopefully everybody ended up having a very good trading day. The banks were closed today, so this is one of those days where I actually ended up kind of taking a step back, kind of getting everything situated when it came down to like my automation systems and everything goes for just like everyday stuff. So I know that I can be able to be right for what's going to end up happening today and kind of moving forward. But with that being said, let's go ahead and go through the disclaimer real quick, and then after that, we'll talk about everything that I end up noticing or everything that I'm preparing for going into tomorrow. Tomorrow is also the first day that I'm going to end up starting the FTMO challenge with the Up EA. So I'm super excited about that. Going to end up showing y'all what I end up doing with that, with the settings and everything else like that. If you're interested in being able to watch that, you're more than welcome to be able to do that. I'm going to end up having that on TradingView as well to be able to show to everyone. But let's go ahead and go through the disclaimer, and then after that, we'll go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. From education, you can be able to make your own informed decision. You understand that trading involves risk. It involves risk of being able to make money. It also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, as we go through, anytime that we end up taking a look at any type of trades, we end up taking a look at a few things. First thing, we want to be able to see if the market is trending. I love to be able to take trades in trending areas because it allows us to be able to know what the direction is going to end up being. Typically, we end up doing it based off our R2 or R3 rank. If you're not familiar with that, what I end up doing is kind of explaining that as we go through and take a look at our trades. But everything starts off with time frame alignment. And what time frame alignment is to me is where the weekly and the daily are trading in the same direction. If they are trading in the same direction, then we have a trade. If they're not trading in the same direction, then we need to wait possibly a week to be able to see how everything kind of plays out before being able to make a decision. Then from there, we got to have some type of catalyst. The catalyst is broken down into a counter trend line break and some type of economic news that's basically happening, meaning that a change of trend is about to start, and you end up having news that may end up backing the reason why that trend is starting to be able to move from there. But more importantly, after you end up getting all that stuff done, you done went through all the work to be able to figure out and find a trade. Before pulling the trigger, you need to make sure that your equity management is correct. If your equity management is good, meaning that in my case, I like to be able to take trades that give us a 1 to 2.3, at the least 1 to 2, meaning that if you're risking $100, you're trying to make $200. When it comes down to the trade, for me personally, it's 1 to 2.3. So for every $100 that I'm risking, I would love to be able to make 230 off of it for being able to make that move. If that makes sense, type in a Y or yes for the people that are basically watching. For the people that are not watching, and we'll catch this a little bit later. Thank you for being able to pop in. We do this on Mondays and Wednesdays at 9 p.m. or 2100 when it comes down to the hours. So with that being said, let's go ahead and take a look at the economic calendar. I'm going to be very brief with this. Remember yesterday or earlier today, today was Columbus Day in the States. So we didn't really have that much news to be able to come out. And I know for me personally, starting a new challenge, I didn't want to sit up there and place my money in on a day where we see that the market wasn't going to necessarily move. So I personally stayed away from trading today. I didn't necessarily do that much of anything when it came down to trading. I just was setting up everything goes. Trying to get everything prepared for what's going to end up happening going into tomorrow and the rest of the week. Now, remember, we're just coming off of the first week of the month, and typically the first week of the month is where you end up having the most high-impact news and where the most volatility typically happens is the first and the third week, and we'll go from there. But this is the first month where we're going to end up having 5 Mondays, which is kind of weird, but we'll see how everything kind of plays out when it comes down to that as well. Going into tomorrow, President Lagarde is going to end up speaking at 12. And then after that, we end up having Fed Waller is going to end up speaking. But currently, right now, that is considered just to be a mid type of move. So it's probably not going to end up being anything to be able to pay attention to. But we just have to make sure we end up keeping our eyes open for that. Now, from there, we're going to start off with the big three. If you're not familiar with the big three, that's the United States dollar index. We take a look at oil. We take a look at gold. The reason why we take a look at those things is because it allows us to be able to know what the correlation in the market is actually happening. And allows us to be able to know what's happening with U.S.-based pairs, Japanese yen pairs, and Canadian dollar pairs, respectively, for being able to take a look at that. So, with that being said, for the people that are watching, Now, do me a favor. Let me know if my sound is good. Can you just type in a while yes if my sound is good? I had to switch over my mic, and I just wanted to make sure that I wasn't getting any echo noise or anything else like that. Give me a second. Let's see. Let's see. Okay, cool. So as we go through United States dollar index, we'll take a look at this from a weekly perspective. From a weekly perspective, we just came off of being able to have this market be in a squeeze, finally ended up breaking out of a squeeze, had a pretty decent move to the upside, or we end up having about 6 weeks of overall movement. 1, 2, 3, 4, 5, 6, 7, 8 weeks of overall movement to the upside from this overall squeeze pattern. They end up happening, completing the extension at 13,160. From there, the market started to be able to consolidate a little bit. Remember, I ended up saying that I believe that the market would eventually get up to 13,250. I still believe that that's going to end up happening, but I think it's not going to end up happening in the near future. I think that currently, right now, we see that last week was the indecision candlestick, and currently, right now, we see that the market's starting to move against us, at least at the beginning of the week. So the question is, going into tomorrow, we're going to see United States dollar weakness because the market has already completed this de-extension and just allowing the market to be able to breathe. Or we're going to see a continuation phase of what's going to end up happening, or what ended up happening over the course of the last 2 days. But we can see that we have 4 current days of overall bearish movement currently right now. The market has not retraced to the 382, but I do think that it has a little bit more room that it could retrace back to before actually being able to make a move. So currently, right now, what I'm looking at is this. I'm not going to end up placing in the trade yet, but what I'm looking at is this. Market is retracing. As the market ends up retracing, look for a counter trend line break, break up, retest, and then after that, look at start being able to make the move from there. If you don't get that, then I'll probably just stay away until we end up getting a change of trend that kind of matches up with the overall idea and thought process of that. So, United States dollar index, short term, the market is bearish. That means that you want to be trading against the United States dollar. That means that if we're looking at Euro United States dollar, we would like to be able to buy. If you're looking at US yen, you would like to be able to sell. For us being able to make a decision on that. Type in a Y, yes, if that makes sense. Cool. So let's take a look at U.S. oil. U.S. oil, typically we end up taking a look at that's West Texas Intermediate. For me, that I end up taking a look at. So it says WTI. Where are you? Oh, there we go. Would be nice if I do it right. WTI. Now, we'll take a look at West Texas Intermediate. My thought process was that I believed that the market was going to fall a little bit before being able to make any type of move to the upside. The reason why I felt that way was because when we end up having an A being broken, so to me, this was the start of a king's crown. Um, and currently, right now, as we're looking at it, I believe that the market is going to continue doing what it's doing right now at this particular point. Then after that, have a little bit of a U-turn and then start being able to make a move to the upside. But if you pay attention to this last black area right here, we have our A, B, C, D. I'm going to end up making a continuation of this so I can be able to show what the ABCD pattern actually looks like. So um, as we take a look at this from a daily perspective, we see that the market ended up completing right there. But this will be your new A. This will end up being your new B. The market has not fully completed and basically broke the C. The C will basically be the new A. But if the market continues to keep on falling at this rate, then we'll probably end up seeing something to the equivalent of that, which means that there's going to end up being a primary U-turn that's about to happen. I cannot place that in right now and say for certain that that's going to end up happening. Typically, when you end up looking at that, that's based off of the market having a U-turn, and then from that U-turn, giving the market about a week or so before being able to make its true move into the opposite direction. Currently, right now, the market is still considered to be bullish as we go through. Even though it broke the counter trend line break, the market is still considered to be bullish until it ends up having a retest and a rejection based off of that move and continuing to be able to move to the downside. Because of that, Not interested in being able to make a trade on oil as of yet. We do have that as our new U-turn area. If the market ends up respecting that and starting to push back up, then quite frankly, there's really no move to be able to take at all. Okay, so I end up waiting on that one. We'll come back and see what's going on with West Texas Intermediate or oil. All right, gold. Gold has a huge correlation with the Japanese yen and being able to take a look at the United States dollar index. Last time we ended up taking a look at this movement, we ended up saying that I felt like the market was going to end up falling down to the 18 to 14 area. The reason why I felt that way was because you look at the previous time that the market ended up falling and hitting or falling and finding support, it was right here at this double bottom. So it didn't surprise me that the market ended up retesting that bottom before actually being able to push back up to the upside. The thing is now, because the market ended up breaking out of this consolidation right here, are we going to end up seeing a breakout retest phase type of move before being able to get in? Meaning that if you notice, this market started being parabolic and starting to be able to push up, but is it going to end up catching the backside of this consolidation first before being able to move and continue and keep on moving to the downside? Obviously, we won't know that until the charts and everything else actually end up playing itself out. But I'm actually okay with being able to see that move and then hoping that we get a better chance of being able to get in based off of that movement. If I'm just being honest. All right. So I'm gonna end up right now. I'm gonna end up pausing on this one. Gonna wait and see if the market ends up getting back up to the support line before being able to make a move from there. I'm gonna take myself out the camera real quick. Okay, cool. So let's see. I done went through United States dollar index. I done went through gold. I done went through oil. Now let's take a look at US 30. Let's see what's happening with US 30, and then after that we'll kind of make a move from there. I'll take a look at it based off of. I don't look at it based off of Black Bull. I'll take a look at it based off of capital.com. It's been a while since I took a look at this chart and actually been able to trade it fully live without having to kind of analyze what's happening off of this movement. So I'm going to take a step back, go into the weekly, and then after that start being able to make a decision on what's happening. Let's see. If you notice, I don't know why I did that. Sorry about that, everybody. All right. If you notice, there was an ABCD swing that ended up happening over in this area. We end up having A, B, C, D, A, B, C, D, A, B, C, D. The A ended up getting broken right here. We ended up having the market make a new lower low, and then after that, started to be able to push back up and broke the A again right here. So this was your start of your King's Crown right here. I'm going to show what that looks like so y'all can be able to get an idea. Here, A, B, C, D. That's the first initial move. And after that, you end up having here, here. Let's see. When the A ended up getting, okay, let's try that again. See, A, B, C, D. Market made a new lower low, which counted out everything. Went right back up here. Made that low right there, and then after that, the market started to push. I don't like that. That's not a true King's Crown. More like a head and shoulders pattern. On bullish. Yeah. Let's see. More like a head and shoulders pattern. Let me erase that. But with that being said, I'm taking a look at this from a weekly perspective. I'm considering this to be more bullish than bearish. Obviously, if we end up taking a look at what ended up happening over the course of the last few weeks, we can see that the market has failed over the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. Market is hitting the bottom of this Bollinger Band, and then after that, showing signs of being able to have a little bit of pop up to the upside. Now, with that being said, the question that I would pay attention to is, where's it at for Phillips? Are we in a good value position for us being able to get in, possibly short term, maybe even long term, depending on how you end up treating your trades? So I'm going to start off here at the fractal low. Fractal low is where you end up having two candlesticks to the left and two candlesticks to the right that are actually above it. From here, we end up having this be our ABCD swing, or the first initial touch of where the market actually end up going. So it is this A, B. Market went all the way down to the 50, which is expected to be able to end at 38,928. That is the extension from currently where we're at right now. Now, obviously, we got a little ways to go because the market's at 33,000. But it could be the next potential move. Now, with that being said, as we go through and look at the squeeze is already done fired. The market is basically saying that the market is somewhat bearish. And as we end up taking a look at this, it has to be able to break a new high before being able to truly be considered to be a good positional type of move. Currently, right now, that has not happened from a weekly perspective, but long-term weekly, the extension is at 38,000. We go to the daily and start being able to focus in on that moves. You can see that the market fell all the way down to the 50, the extension at 38,928. The market's just going through its overall phase, looking for a counter trend line break to be able to push back inside of before being able to make a move. Let's see. Market broke, rejected right off of here. Yeah, I think that there's still some room for upside movement currently right now at this point. Just going to end up waiting on it, but I think there's some room for movement to the upside, but don't like what I'm seeing currently right now. No, not interested in being able to jump in. Take a look at Nas 100. Nas 100 has had a better move to the upside. Currently right now, we look at the I'm going to replace Phillips on here. We can be able to talk about what's happening with this movement. Here goes your A. There goes your B. Here goes your. Let's see, get off of that. Good retracement. A, B, C, D. Then after that, it is here. Went down to the 618. Oh, I'm sorry, to the 786. Kind of faltered up here. From here to 618. So it'll be up here. Okay, I need to stop doing that. See here. Start doing that. Okay, so here, one, A, let's see. B is right here. Currently, right now, this is C. The extension has completed going to the upside. And I think that's the reason why the market is starting to fall a little bit. We're starting to see a little bit of consolidation. It's kind of building up. The question is, are we going to end up seeing a true consolidation, or are we going to see the market kind of break out and then kind of start settling into its move going into November like it typically does? Or are we going to finally end up seeing that October push that always happens when the market has been going in one direction and then after that pop up to the upside or pop up to the downside? I'm going to show y'all one example of that of Euro United States dollar. But currently, right now, we'll look at this from a consolidation standpoint. Nas 100 is in the middle of this zone. I'm not interested in being able to make a trade off of that one as of yet, too. Okay, so I went through a few of them. Didn't like what I seen when it came down to the big three force pairs, but I do want to highlight Euro United States dollar, and we ended up having a big move off the New Zealand United States dollar um, last night or yesterday as the market ended up making its move. So I'm going to be brief with this one. This was what we ended up talking about. Market was in a long-term consolidation. It was there from all the way until November 11th, of 2022 to currently where we are right now, going into October. Market fell all the way down to the support at 105.24. Since then, the market has popped back up to the upside. Currently, right now, market's in the green. We end up talking about this trade going all the way up to 1.15. And the only way that can be able to happen is that we start to be able to get a little bit of movement from this at the beginning. And then after that, hopefully a little bit of help when it comes down to being able to find a way to promote it a little bit when it comes down to the move. Or being able to get a little bit of help from people when it comes down to the push and being able to see that people are going to end up making the move off of this one. But market ended up hitting support. We're basically in a position to where we can be able to say that we believe that the market may end up going all the way up to 1.10, or we can be able to say that it can go back up to the halfway point, and then after that, make your decision from there. The reason why I say that is because from when it comes down to consolidation, I really only go with a 3-point rule, meaning that if the market's done hit the consolidation or the support at least 3 different points, then um, currently right now you just need to wait. And if you do take a trade, you want to be able to get out at the halfway point. So there you go. There goes 1. Here goes 2. Here goes your third time. My take profit will end up being directly in the middle. The next time we end up doing something like this on a move like that in general. Do have a counter trend line break, which is good. I want to take a look at it from a 2-hour perspective and want to see if we should look at being able to get in. Let's see. Get that out the way. Okay, so we have this A, B, C, D. Market went up to the D extension right there. The A was broken right here. Went down to the 618, but A was broken when it came down to that movement. So there could be a potential U-turn that could happen. Let's see. Currently, right now, it's going to sit on my hands. Initially, I ended up saying that I believe that the market was going to end up being bullish because typically you end up having an October push or October rally all the way into the beginning of the new year. But what that will mean is that typically from June all the way until July, when you end up having an opportunity to be able to figure out what's going to happen with the move or see how the move is being developed. Typically in late October or middle October, that's when moves like this actually end up starting to be able to happen. We can see that the market ended up having this big fall, starting to get into an accumulation phase, and then after that, you see a move up to the upside. We've seen the same thing with U.S. yen. We see the same thing with U.S. 30 and Nas 100, as that we've seen that the way that the market ended up moving, the way that it was structured, it was finally time to be able to make a move off of that. Euro United States dollar currently right now looking for a bullish move. I believe that the market could get up to 1.0670. The question is how much time is it going to end up taking for it actually ends up breaking the high of this move, and then after that starting to truly push up towards the extension. We don't know that yet, but once again, just trying to see how the market's going to end up playing itself out. Currently right now, we end up going through 5 different charts. What I'm going to end up doing is calling it short for right now because I am still just kind of interested in being able to see what's going to happen with these moves. There's really no move that's developed and ready to go. But once that happens, then after that, I end up placing in an idea on the homepage so you can be able to allow us to be able to make our own informed decisions based off of what you think. Like always, make sure that you end up planning your trade. Trade your plan. I'll see each and every one of y'all in the next video. Take it easy.